Welcome back to the third and final segment of the Loveland Report and Lone Ranger Show. Thank you for listening to two of the best real estate mortgage hosts,
most
on
handsome men in the mortgage
faces,
and real estate
faces
business.
for radio. Yes.
Yeah, faces for radio.
We've been talking about rates. We've been talking about how this stuff will straighten out. The market is doing well. There's signs, there's glimmers of hope on things picking up. When I say picking up, I just get back to a normal market, 3 or 4% appreciation. We've been flat. Depends on what the house is. You know what's funny though is I have people worrying about I haven't seen them in a while, but I have those people out there, Bruce, say, I'm going to wait for the market to crash.
Yeah, well,
there's no distress sales. I just saw something. There's 5 foreclosures in Central Florida. 5. Yeah, out of 15,000 homes for sale. It's funny. I had somebody saying
3 short sales, and I have 2 of them going on.
Oh, really?
Right now.
Okay. We had a buyer that said they only wanted foreclosures, and they were buying around 500,000. We showed them the foreclosures in town. They're like, I'm not going in that neighborhood. I'm not doing all that work on that house. I'm not doing it. They're like, okay, all right, let's go look at houses. So it's very rare. And it's funny, the people that spend their time that want to hunt for those things or hunt for distressed properties or hunt for a deal. Great if you don't have a job.
But you know what? The thing is, you know what? People have, they're uninformed. They're ill-informed about that because people, the only reason somebody'd say, I want to buy a foreclosure is because you think you can get a better deal.
Yeah.
You could in 2000 because the banks were flooded with them and didn't have the systems to get rid of them. So you could buy them for pennies on the dollar, but banks don't do that right now.
They've done the math and they know that it's much better to give that person a modification, to do a loan mod,
cash for keys,
to do a forbearance, cash for keys, short sales. Before 2008, I'd never heard of a short sale until the banks finally said, okay, I guess we got to do something or we're going to be in big trouble.
But a bank is going to market their property for market price. They're not going to take a dip on it just to get rid of it. They're going to try to get it sold in 30 to 60 days. They're going to price it right. And then when it comes to a short sale, here's what people don't understand about a short sale. I've got 2 of them right now. I've got the buyers on both of these deals. And when you go into contract on a short sale, you're making an agreement on a contract for a price with somebody that can't negotiate the price.
Yeah.
Okay. So I'm a buyer. You're a seller. You're going to sell your house for $500,000. You owe $525 on it. Okay.
Yeah.
So you're going to short the bank, but you're going to get 500. Now, what if that house is worth $515? Then I go into contract for 500. I wait 3-4 months for the bank to get back with you. And then they come back and they go, we want 525. Oh, and we're not going to pay your closing costs for you.
Yep.
And they do that at the last minute. And then they say, and you have to close in 10 days because we've taken 4 months to figure this out. Yeah. Now you got to close in 10 days or 14 days.
The banks aren't known for doing things quickly or speedy. No. It's very important. You just have somebody good helping you. I've never met a buyer, Bruce, over my 33 years in the business that made the best buy in a lifetime because they took so much time and refused 10 good homes that came along. And I said, hey, this is a good price. Buy this. You're much better off. Get an education, get it done, trust your agent, get into the house, get back to work, make it your home. And then save up for our Leapfrog. Save up, Leapfrog to your next one, and then start building your real estate portfolio.
Matter of fact, we'll get another Leapfrog wealth building class on the calendar. Also, if you folks are really interested in helping maybe your adult children or adult grandchildren, I'm going to be getting more and more short classes on my calendar, Zoom classes, for helping young people understand how to get into real estate. And you don't have to be young. You could be old. But I'll give you all the techniques on it, and then we can have some questions and answers. So we'll get some of those on the calendar. Just go to webringyouhome.com. You'll see my calendar. But if you've got young folks that you'd like to help, then I'll get 10 of you all together and we'll do a little Zoom class. We'll have some fun and I'll help educate your children. They're not going to get a sales pitch, folks. They're just going to get the same thing that I give to my children and the same thing I've done to help other folks help their kids get into homes. I got a guy right now that he was struggling to find the townhome that he wanted, and he decided to give up because he just couldn't find what he wanted. And I'm like, you're not doing, and he's got an agent that's I don't think is helping guiding him in the right direction. And I'm like, why are you going in this direction? You could go down the street and buy a single family home for $50,000 to $65,000 more. So you're looking at townhomes at $265,000, okay, that have a 410 HOA. 410 is equal to $65,000. Yeah. 410, listen to me, folks. 410 HOA is the same as a $65,000 more house you can buy with no HOA.
Yeah.
So why wouldn't I go from Longwood in a townhome to Castleberry and a single family residence?
Yeah.
Or Altamont? You can
Yeah.
find one there too.
Yep.
We can help you with that. You've got to get the right guidance, folks. Don't not buy because you didn't find what you wanted the first couple of times. Maybe it's not changing and saying, I don't want to buy. It may be changing your perspective instead of your plan.
Yep.
407-250-9144. That's 407-250-9144. Whether you're a first-time home buyer, move-up buyer, you want to buy a vacation home, you want to buy investment property, I got unbelievable investment opportunities with loans. Incredible. Cleve and I are both investors. We're doing the same thing that you do. We give you the same advice that we take. And most of the time, if there's a mistake to be made, we've already made it. So we'll keep you from making that same mistake.
5 times over.
Cleve, how do they reach you?
All right. 407-352-8118 or cleveloveland.com.
Yep. So I want to talk a little bit about self-employed people, because I believe that self-employed people are the heartbeat of America. Okay. We're the people that really keep things moving. I want you to know that the way you do your taxes and your creative accounting practices keep you from getting conventional financing. When you bring your tax return into the bank and you're like, I made $500,000 last year. I'm sorry, Mr. Jones, you really only made $29,000. That's because you wrote everything off. The bank is not going to consider your gross amount. No lender will. With me, as an investor, you don't need your tax returns. I can do a bank statement program, last 12 months bank statement, business bank return, business bank statements, no tax return. DSCR, debt service coverage ratio. All that means is the only income document that I need is the appraisal, and the appraisal to show me how much the rent's going to be on that property. Now, if there's already a lease on it, that works fine. I just closed one of your clients on a multifamily complex, and the interest rate that I got this gentleman after we did a buy down, the seller paid some closing costs. We did a buy down. He had an interest rate that was pretty close to what a regular Fannie Mae conventional loan would be.
Yep.
You can do it, folks. Don't think you can't. It can be done. Now, will every transaction work out that way? No, we actually got a little bit of help from the seller on that, but he got a great deal. He's making $1,500 a month profit on this rental property. Yep. And actually, Cleve and I thought we might never get him done because he's a really good guy.
Spreadsheet expert.
He's a spreadsheet
Never
analyst.
met a spreadsheet he did
now,
not
listen,
love.
we love this guy. He's a really good client. And I really like him a lot. He's probably listening right now, but he's very analytical. You know who I'm talking about, don't you? I won't mention your name. Okay. So, all right. Very analytical. And I'm like, oh my God.
We found the property.
It was so picky. Cleve and I went, I don't think we'll ever find anything for him. You know what? We did. We stuck with it. We got him a property, and it's a win. It's a nice
cash
property.
Flow, great condition.
Really
we saw some real junk out there, especially. And this is one thing I have people call me, Bruce, sometimes looking for the investment property. And they're like, I want an apartment building. We don't have that here in Central Florida.
Not a lot.
It's very rare. Like in the big city where they're all over the place and you can buy I was talking to some friends of ours when we went to that summit last weekend. They got apartment buildings in California with 36 units in them they've bought. And just looking at that, we don't have a lot of that here. So a duplex is one way to get into the market on something like that. I like the single family homes because I like higher rents on average. And let's say your rent per square foot might not be as high as a smaller starter duplex. It's a 3-1 with 1,200 square feet aside, but I like the appreciation on the single family home a little better.
I do.
So they all have their advantages and disadvantages, but I can help you.
But you and I can weigh it out, whether it's a single family, a duplex, a triplex, a quad. And now I have products for people to get into up to a 28 unit complex. Oh, yeah, I sure do. Well, I've got a builder line for you builders that are building between 5 and 50 homes a year. I got a product to help you put more specs in the ground. You got to call the loan arranger. Listen, there's not that many programs I don't have. There's very few. And I'm not a commercial lender, so I do residential. So everything. But if we get over 4 units, it is commercial. They're considered to be commercial. I have that product. And it's all done.
I want to talk to you about a great class you put on last week, and tell me this. You're going to know. I got a young lady. young lady. She's going into a 55 plus community.
Okay.
She's doing this so the kids can't move in with her. The kids moved in with her and just basically
wonderful thing.
Took over her 4,000 square foot home, which will be a listing. She's getting it cleaned up. I think she's made the kids, she's told them the end is coming. It's going on the market. You need to get out.
Okay.
And it's pretty funny because we were looking at this and she's going to get a big chunk of change from the house.
Okay.
She doesn't have a lot of money saved. She's got a Social Security check. And I said, what if you bought the new home? She's going to buy probably around 350.
Okay.
And I said, what if you took of the $500,000 you're getting and you put down 200,000 and you had no payment? Right. That be a nicer lifestyle for you?
Yeah.
And she's, what are you talking about? She thought I was talking about witchcraft or something. So talk about the reverse mortgage and how that can help people.
So a reverse mortgage, you've got to be at least 62 years old, generally in most cases. At least one of you, if you're married, has to be that age. And it does require a substantial amount of equity. So you can't do a reverse mortgage with 20% in equity. You need generally 50 to 55% equity. That would be a loan to value of 45%. The more equity you have, the better. But what you do is you get let's just say she's got 500,000. She's buying a house for 300. She puts 200 down, borrows $100,000. And then I give her a line of credit to tap into. Let's just say the line of credit is available when she needs more money because her Social Security didn't handle it. And she wants to go on a Viking cruise. She pulls money out of the line of credit. She still have to pay the line of credit back.
Yeah.
And every 10 years, that line of credit doubles. Every 10 years, that line of credit doubles. And some people are worried that, oh my God, I want to leave my house to my kids. And if I do that, my kids are going to lose the house. Not true. That is not a true statement. It's not going to happen. Matter of fact, let's just say that your house went way up in value.
Yeah.
Okay. Way up in value. Your heirs can buy that home from you as long as they got the mortgage to pay off. They got all the equity. They can take the house over. And they have 1 year to do it. Talk to a professional. Don't go with one of these commercials that I know Joe Montana's got one he's doing, and Tom Selleck.
I haven't seen Tom do one in a while.
I haven't seen. Is he still alive? I'm not sure he's still alive. But listen, you want the professionals. And here's why I suggest that you give me a call. I have been the world's most skeptical lender on reverse mortgages. Yeah. Okay. I'm going to tell you right now, I will, there's many opportunities and I'm going to go, I just don't think that's the right thing for you to do. So come to me. I'll guide you through the process. I have a reverse mortgage department. That's all they do is reverse mortgages. So call the loan arranger at 407-250-9144 or webringyouhome.com. That's webringyouhome.com. How would you like to go into retirement and never have a mortgage payment and not have to give up your house? I'm actually talking to my wife about that because I thought, what if we did that on our home? It'll be paid for in 3 years. And we did that on our home and we could stay there and not have to move out and have a place to have the grandkids come over.
And the one thing I have seen, I've come across some situations, Bruce, where I've got one, the gentleman lived to be 94 and he'd been in the house for 25 years.
Sure.
So the mortgage has actually reached the value of the home and it's adding a big chunk of interest every month. So something like that, a bit extreme, but there was tons of assets they had. So the family wasn't too concerned about it. But dad had a place to live.
And the thing is, if that client lived that long, they ran out the mortgage, but you know what? The bank can never come to you for the difference. They can never come to you no matter what happens. Even if the house dropped in value by $200,000, the bank cannot collect that difference from you.
Yeah.
We got to wrap it up. This is time.
407-352-8118 for Loveland Properties. I probably sold, helped buy, or manage one of those properties on your street. Give me a call.
Yeah, or call the loan arranger, Bruce Woodburn. I'd love to help you, your family members, your employees, your coworkers with their next mortgage purchase, refinance, construction loan, you name it. I got it. 407-250-9144 or go to webringyouhome.com. Thanks very much for listening to Cleve, and I will see you again next week.